This is Funder. When you subscribe, you turn knowledge into money. Money doesn't move because people are smart. It moves because people believe. Every cycle has its story, every story has its believers, and every believer eventually meets risk. Today, Bitcoin sits right in the middle of that tension. Not as a trade, not as a headline, but as an idea that asks an uncomfortable question about money, trust, and who really holds the power. Our guest today spends his life translating those ideas for everyday investors. He's the host of The Everyday Investor, someone who talks to real people about real money decisions, not just theory, not just charts. Darcy Ungaro joins us. Darcy, you speak to everyday investors every week. What do you think most people misunderstand about building wealth over the long term?
Thanks for having me on the show, Andrew. Appreciate it. To answer your question in one word, probably time frame. To answer it in two questions, I'd say maybe time frame matching volatility. In other words, am I doing the right thing for the amount of time that I'm going to be investing for? And that's the thing that most of us get wrong, because we get excited when we see the price run up. We pile in, usually with short-term money or money that we want to spend within, say, at least 5 years, within a 5-year window. And we forget that often for those investment returns to eventuate, you kind of have to be willing to ride it out for those longer time frames. And the reason why is because there's a relationship between how volatile or how wobbly the price is and time and the performance, of that investment over a long term. So yeah, if I was to answer that really simply, I'd just say getting a mismatch between how long they can invest for and the amount of volatility they target. They either target too little volatility because they're young and they have a huge time frame to go. They're doing things like repaying their mortgage really aggressively. Dumb, in my view. Or they're older, they can see the finish line approaching at time of retirement, and they pour on the risk, really uncertain bets. They're trying to, it's like cramming for finals when you're in school, right? Like you're trying to make up some lost ground because you sense that time is running short. And that's the stupidest thing to do. Old people invest like young people invest like old people. That's kind of what goes on. So yeah, if you get that time frame and volatility match just right, happy days. It's like 90% of the problem.
How has hosting the Everyday Investor podcast shaped your own investing philosophies? There must have been a time where you adopted new ways of thinking based on what the guests had shared with you.
Yeah. Look, and to be honest, when I first started doing the podcast, I was probably one of maybe 4 podcasts out there in the investing space. And so I was learning how to do podcasting, still am. I was probably learning how to be an investor myself personally first, even though I've been a financial advisor for 22 years now. It was mostly in the area of lending and insurance, and the investing part came later. And I think like a lot of people who work in this industry, you're more or less, let's be honest, you're a conduit for product manufacturers to push their stuff on consumers. You're not necessarily helping people get wealthy. No disrespect for those that do genuinely help people get wealthy, but there's a lot of product pushing, and financial advisors are really seen as a distribution channel and one to be managed according to the regulator. And so when I started looking into this and I talked to real people who made real amounts of money, they weren't diversifying in an ETF. They were concentrating into very uncertain specific bets in business, or more likely in New Zealand here in property. And so eventually, when I got into having a broader conversation with people, I tapped into this Bitcoin thing, which I was 100% a skeptic on. I thought it was made up internet money, but it was just another example of eventually figuring out that, hey, I don't know what I don't know yet. I better get to know this before I have this conversation. So doing the podcast helped me to be a better investor because it forced me to look at things for what they really are, rather than through the frame of reference that I'd built up over, my career at the time.
Well, if we presume that most of the listeners are not Bitcoin fanatics like yourself, how do you frame Bitcoin as solving a problem?
Yeah, so it's a funny one, right? So a lot of people will say that Bitcoin itself, it has no intrinsic value. It's not, like, what is the problem that it solves? And I think the problem that exists that a lot of investors don't really I won't say realize or appreciate, but don't really respect, is the fact that we have what I call a denomination problem. We have massive concentration risk in the unit that denominates all our investment value, whether it's property, our bonds, term deposit, shares, funds, KiwiSaver, whatever it is. It will always be liquidated. It will be sold off, and it will be translated back into New Zealand dollars or whatever the currency is of the country that you live in before it can be traded for value. And so you have this choke point, if you like, to use a term that I hate, but you have this throttling space, or this place where everything kind of has to go through this conduit, like sands through the hourglass, if you like. And that represents, in my view, the biggest risk, because we know that the financial system is not infinite. And by financial system, I just mean network of banks, large investment firms, hedge funds, regulators, clearinghouses, custodians, central banks. List goes on and on and on. The network of all these traditional systems using as its lifeblood currency, which is created out of thin air by governments, also known as fiat currency. That system is not necessarily bulletproof, infinite, set for a more digital future than what we have right now. And as a result, if we still keep on investing in a way which is dependent on that investment converting back into fiat currency for us to spend in the end, our investments might do really well, but we're forced into trading it for something that can be diluted to absolute zero in the future. And so that's like the biggest concern that I have, and that's the biggest problem that I see Bitcoin actually solving, is that we can actually now diversify the denominator. And instead of holding all of our investments that translate into fiat currency, which can be controlled by the government, by allocating a very small amount of our wealth today into a form of money that may become exceedingly valuable in the future, we offset some of that risk. That's why only a real small amount allocated towards Bitcoin can actually achieve its intended purpose. And in my mind, it's basically schmuck insurance. You didn't want to be the person who was a schmuck and who didn't get a little bit of this, because if the whole thing falls down, what are your options?
I suppose if you are going to be serious about investing, then a hedging strategy makes sense. So at a philosophical level, do you see Bitcoin more as a monetary system, technology, or a social movement? How do you categorize something that's, you can't even see what it is?
Yeah. Hey, this is a really good question, because I honestly can't really answer that question super confidently. All I can do is kind of speak to the components of what you just said. So philosophically, if I look at it through the monetary lens, I look at it as a decentralized financial system, which is peer-to-peer, and it's outside of government control. And so philosophically, I identify with that, because I would probably be not necessarily right or left in the political spectrum, but I would be outside of it, or I like to get myself outside of the political spectrum if possible, probably more on the libertarian spectrum. And therefore, I would have a rather strong distaste for excessive grabby governments. And I would much prefer to take back sovereignty over my own finances, like vertically integrated all the way down to that unit that I hold, which is a form of money. So if I can hold a form of money which is not able to be controlled by government in any way, then I feel like I've actually taken care of that monetary concern that I have, which is that he who controls the money controls the world. And if you want to fix the world, therefore, you have to first start by fixing the money. I don't believe solutions come from government. I believe solutions come from people and businesses. And therefore, I want to hold forms of money that work with businesses and people, because that is hope in my mind. That's the monetary one. I think you said something to do with what were the other two parts of that question?
Yeah, monetary, technology, and social movement. So I guess you've answered the social movement being, depoliticizing the monetary system.
Yeah.
Technologically, we certainly have heard governments around the world talking about turning their currencies into a digital currency.
Yeah.
Is that going to replace what Bitcoin's been trying to do, and Bitcoin's going to be just a a speed bump in history that gets overtaken by governments doing the digital currency thing?
Yeah, that's a great question because like I was born in the mid 70s and I grew up with VHS cassette tapes, for videos, and then Betamax, smaller version of those cassette tapes. Betamax was better, and but it never took off. The VHS, which was an inferior technology, that took off. And so in my mind, I always kind of think of this that it's not so much about whether the technology is better. And in my view, Bitcoin is better on almost every single level that you can imagine. Yeah, it's immature. It still has a little bit of growing up to do. Businesses and institutions have to be built around it. So it's not yet mature, but it's got the right DNA, in my view. Just because it's better doesn't mean it will be best in the long run. And this will probably ruffle a few feathers who are probably pro Bitcoin, but I think that we still have to have mass adoption continue. And we are experiencing mass adoption, and it will probably continue to grow exponentially, much like the internet did. But we don't know what the future is with any degree of certainty, and there are risks. And so, yeah, we just have to kind of be prepared that we might be wrong and that CBDCs, central bank issued digital currencies, maybe through the form of stable coins, which we're seeing gain a lot of traction and popularity now. But let's just say a government comes over the top, hijacks it, and now we're all using stable coins, but really they're CBDCs and drag, perhaps. I don't know. The reality is that only some people currently understand the reason why we need Bitcoin, and a lot of people are still willing to, I guess, take the pre-existing formula, right? Like we still want to be subservient to the state, a lot of us, and use the money that the state provides. And it really requires a clean break from that type of thinking to actually understand why this is important. In my view, I don't think governments are going to get more trustworthy. I don't think institutions of all sorts will become more trustworthy in the future. I think they'll become less trustworthy. And as a result, I think decentralized money will win in the end, unless somehow magically there's a political leader that rises up that gets everybody's confidence and everything's all happy days for a bit.
I guess as a percentage of the population, not many people are sovereign individuals and have the ability to escape the reality of the rule of law. So governments will have control over 99% of people for a very long time. What do you think the critics of Bitcoin get wrong the most often?
Yeah. And well, I could probably speak to that in terms of my own sort of personal experience in that when I first discovered it, I kind of thought this is in the internet where you can literally go Control C and then Control V infinitely, and you can just make stuff up anyway. Like, how could you have finiteness within the internet where everything can just be duplicated infinitely? And so I really struggled with that, and it wasn't until I understood the and there's a name for it that I'm going to get wrong. I think it's like the general's dilemma or something like that, where it wasn't until I understood the technology behind how a blockchain works and how it can create finite code that I really understood that, cool, when you have finite code and then you have an exponential rate of adoption, you put those two things together. Okay, now I understand it. And I think that was the turning point for me. So I think looking at the internet and the digital world and just assuming that you can make copies of this stuff and anyone can invent this stuff is not hard, and it's not. There's literally hundreds of thousands of cryptocurrencies. There's only one Bitcoin, though. There's only one store of value, and there's only one asset, i.e. Bitcoin, that I personally would hold long term because I believe it would have value long term. And I think that just takes a little bit of mental gymnastics to understand that.
And if we flip that around, what do Bitcoin supporters tend to underplay or they avoid discussing?
Yeah. Probably volatility, to be honest. So volatility, wild price swings, and like real hardcore Bitcoiners don't care about volatility whatsoever because it's not about the thing that denominates Bitcoin, i.e. it's not the fact that you can take Bitcoin and trade it for US dollars and then New Zealand dollars. It's the fact that you can get Bitcoin, full stop. That is their unit of account. That's how they measure their wealth. They live in a Bitcoin world. But for those that aren't quite there yet, they still need fiat currency to live, to pay the mortgage, to buy food, to send their kids through to school, all that sort of stuff. I think that not understanding how to find that balance between money to spend and money to allocate towards Bitcoin. I think people in that community get it a little bit wrong, and they put everything into Bitcoin. Then the volatility strikes. All of their wealth is sitting in one asset, which is now worth 40% less than it was at the start of October. And then they're forced into sucking that loss because they put too much of their wealth into it. And I think the other thing is that, and this is, again, it's a really contentious issue for those that are hardcore Bitcoin maxis, as we call them, is that it's really easy to dismiss other crypto assets like Ethereum, Solana, Sui, and the list goes on for thousands and thousands. Again, I personally would not recommend any of those other crypto assets as investments. I only see Bitcoin as the only asset to hold long term. But I do see that whether it's the tokens themselves or the ecosystem or businesses that build within these new decentralized financial systems, I think those businesses especially will have value. There's a lot of needs that businesses will have. There's a lot of problems to solve out there that the fiat system will not solve for, and that the Bitcoin network is not yet ready for. It has the capability to handle, in my view, almost every problem there is in the money world, but I don't think everything is being built yet. And so there are other crypto assets. So getting this kind of like siloed, really religious fervor lens on your way of thinking, which happens in the property space, it happens with index investing, it happens in also like value investing. It happens in every area of investing. People get really siloed in their thinking, and they kind of just automatically dismiss other asset classes. But I think the more you can kind of be open-minded while at the same time convinced that you're onto something, it's just really good risk management.
Well, stay tuned, subscribe for part 2. We're going to follow along soon. Thanks, Darcy, for your insights. You can follow Darcy on the Everyday Investor podcast and find him at Radical Investment, and we'll catch you again soon. Before we go, most people treat their KiwiSaver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you want clear, simple guidance on choosing the right provider and the right type of fund, you can talk to Wealth HQ without paying a cent. Maybe you like the thrill of crypto. Maybe you want nothing to do with investments that profit from conflict. Maybe you just want a sense of control over where your money goes. Wealth HQ strips the uncertainty out of the process. If you want to understand your options, the link below will take you there.